Hello, everyone, and happy Financial Literacy Month. My name is Solomon, and I am a Student Success and Financial Education Specialist from the Office of Student Success. And today we are going to talk about credit, debt, and credit reports. So before we begin, I just want to give you a note that credit building in the US is a US concept to measure your overall ability to borrow and repay money. All students should be aware of their individual scores and understand that there are many factors that affect your score. Part of this understanding is how debt affects your overall ability to grow financially. And again, just be mindful that many other countries use different scoring models to determine your credit worthiness, or may not even have a scoring model at all. So before you plan to live or move abroad, do your homework, do your research. So what is credit? Credit is purchases that are made with a credit card and are paid for by a loan from the bank, right? This is billed monthly. So try to pay in full, or at least pay more than the minimum that is due, because interest will accrue monthly. And interest is essentially a fee that the financial lender will charge you to borrow their money. So pay in full. Debit is the opposite of this. This is purchases that are automatically deducted from your bank account. This provides an alternative payment method to cash, and there's no interest charge. So when you can use debit, pay with debit. Now, there are two types of debt. You have secured debt and unsecured debt. Secured debt is your repayment is backed by some form of collateral. So if you're planning to take out a car loan or a mortgage, just know that the financial institution or the lender will place a claim on your property. And so if you miss any of the payments, they can come in and repossess and essentially own your property. So just be mindful of that. If you're going to do it, make payments on time. And then you have unsecured credit. And the financial lenders are strictly going off of your promise to repay the amount that you borrow. So this type of debt is, educational loans. So you're thinking student loans, revolving credit, such as credit cards, or a personal loan that you may take out. Credit reports are statements that has information about your credit activity and current credit situation. Information on this report includes personal information, your credit score, your credit information, public records information, inquiries, and statements of dispute. Typically, you get one free credit report per year from each of the agencies. The agencies are Equifax, Experian, and TransUnion. You can visit annualcreditreport.com for your one free credit report if you need to take a look. Your credit score is a number between 300 and 850 that depicts your credit worthiness. This is based on the number of open accounts that you have, total levels of debt, your repayment history, and other factors. Things that are not included are race, color, religion, national origin, age, sex, or marital status, your employment history, your occupation, your salary, where you live, or non-credit inquiries. Just be mindful that more than 70% of the top 100 financial institutions use FICO 8 scoring to make billions of credit decisions annually, because it is fast, consistent, and objective. It's cost-effective, reliable, and updated regularly. So if you're looking at Credit Karma or any of your mobile apps to determine your credit score, make sure that it's FICO 8. If it's anything else, like Vantage Score, just know that lenders typically go to FICO 8. So it's important to understand where to find your FICO 8 score. Well, that concludes today's segment on credit, debt, and credit scoring. If you have any questions, feel free to leave a comment, and be sure to connect with us on social media and visit our website. Have a great Financial Literacy Month.